In my previous Dropbox video, I talked about why Dropbox is stuck at $19 for a long time, so if you haven't seen that already, you can check that video out over here. But in the meantime, what I really want to achieve today in this video is why Dropbox went up to $25 only to head back down to $22, where I see the price target for Dropbox in 2021, and a few couple of important updates regarding Dropbox. Alright, before I get into it, to those who just discovered my channel, I'm Xratios. I've covered stocks for years and shared some hidden gems on my channel with 100% to 1000% gains like NEO at $4, Plug Power under $5, That's Not Metal at $10 and many more. So hopefully there's still more to come. And also don't forget to sign up with Weibo if you haven't already under the link provided below and get 4 free stocks for a limited time only from one of your favorite company including Apple stock. What's more is that you can enjoy extended pre-market trading as early from 4 AM and as late until 8 PM. Okay, first, let's start with Dropbox's current price point, especially considering the fact that Dropbox has recently reached 52-week high to $25.16 only to fall back down again. Now, typically when I see price action like this, I tend to ignore it because till this point, nothing has changed in Dropbox's long-term narrative in terms of Dropbox's rapid expansion and its technology infrastructure and how the demand is still likely favoring towards a hybrid remote office model moving forward in the next decade. But I think Dropbox price action flipping around recently is worth mentioning because honestly, I don't want people to be like, hey, why is Dropbox going back to $19 again and then create unnecessary panic. After all, this has the potential to influence your investment in the near future over the next few months. So in order to really understand why Dropbox reached the 52-week high, we first need to go back to exactly 1 month ago on the 1st of December in 2020. That is, Salesforce acquired Slack for over $27 billion, marking cloud software vendors' largest deal ever. And if you're wondering what does this have to do with Dropbox, well, that's because this acquisition has led to a new speculation about a potential acquisition theory that appeared on Twitter. I know not the most credible source, but yes, that did lead to an increase of 7.47% to $24.17 in pre-market trading on that day itself. In that sense, it's a bittersweet news for Dropbox shareholder because while it's nice to see the gains, but at the same time, we know it's pure speculation and has completely nothing to do with Dropbox business model. And subsequently, that's the reason why Dropbox is collapsing, because this speculation has yet to materialize for traders who have waited and waited for something to boil up only to get bored of waiting. Knowing what we know now, let's go ahead and talk about why people think the possibility in this speculation theory itself seems extremely likely. I pointed this out in the past that for Dropbox to continue to grow, it needs to keep improving in the 3 key metrics, which are revenue, innovation in digitization, and paying subscribers, which is what we have seen so far, by the way. So far, we have seen Dropbox's serious attempt in moving towards project management and team collaboration through key acquisition in Tap Engage, Bubbly, Cloud On, Loom, and HelloSign. Through this attempt, it's clear that Dropbox is trying to adopt a brand stickiness strategy. Take Amazon for example. When you sign up for Amazon Prime, what you will be getting is not just shipping benefits, but many other access like streaming benefits, including Prime Video, Prime Music, to shopping benefits, reading benefits, and many more that makes you want to retain Amazon Prime for years to come. Similar to that sense, Dropbox is essentially trying to emulate the same thing by creating a wide range of platforms where people do not have to jump in and out of a host of apps to see what's going on. So anytime if you need to facilitate real-time conversations around shared content, electronic signing, or Vault for secure document storage, Dropbox all-in-one platform solution can offer just that, essentially making workflow better. This means that from a business perspective, it makes sense for bigger companies like Google, Oracle, Zoom, or even Salesforce to acquire Dropbox so that they can not only absorb Dropbox's 600 million registered users to its platform, but also take advantage of Dropbox's ready hybrid remote office platform in order to create an even bigger brand stickiness. And that's the reason why people are buying into this whole speculation theory. Now, let's forget about this speculation theory thing for a moment moment, because if you're investing in Dropbox solely based on the acquisition speculation, then you might get disappointed if that didn't happen. Instead, let's discuss about Dropbox upcoming earnings report on the February 18 in 2021. I know it's early, but you'll see why this is important by the end of it. So back then in the third quarter earnings, Dropbox reported earnings per share of 26 cents, beating the analyst forecast of 18 cents per share. Dropbox also reported revenue of $487.4 million, again beating analyst forecast of $483.6 million. While both revenue and earnings per share numbers are good, but the problem is Dropbox didn't provide the fourth quarter guidance in its release. Instead, Wall Street analysts give a target earnings of 20 cents per share on revenue of $494 million. That means that Wall Street analysts are only expecting a small increase of 1.36%, and that explains why Dropbox is down by almost 5% after hour on that day itself, and part of the reason why people remain downbeat about this stock. However, if you have actually listened to the earnings call, what you will find here is a very positive thing to look ahead. Look at this. In Andrew's own word, in Q3, HelloSign continues to be the fastest growing product. HelloSign was recognized as the number 2 overall e-signature vendor in G2's fall report, as well as being ranked number 1 for ease of adoption. They are also excited to see this traction and continue to be optimistic about the opportunity ahead. Demand for the product remains strong as more people have turned to both Dropbox and HelloSign to manage their most important workflows. So what this means is that the opportunity lies within Dropbox remain massive, and that's strong evidence to suggest that Dropbox will become a solid growth stock to look out for in 2021. Overall, I believe that Dropbox still has a lot of room to grow in contrast to what the Wall Street analysts are suggesting. Considering that DocuSign control about 70% in the e-signature market, and the fact that Dropbox HelloSign is still relatively new in the e-signature market, but as long as Dropbox continue to innovate towards the accelerating digital trend, there's a lot of reason to remain optimistic about Dropbox e-signature and hybrid remote office platform. That's all I have in this video. I hope you guys enjoyed my research. Please hit the thumbs up button so that this video can reach to a brand new audience. And again, don't forget to sign up with Weibo provided in the link below to support this channel. Also, remember to subscribe for a new future video if you want to learn and watch more of my elaborated stock research. Till next time.